Melnick, founder and CEO of Token Relations. And joining me today is HBAR Chief Business Officer Greg Bell, founder, CEO of Red Swan, Edward Nochetti, and Canary Capital founder and CEO Stephen McClurg. Hello, guys. How are you?
Jackie.
Good afternoon. Yes, it is afternoon. It's good to see you guys. Thanks for taking the time today. Before we get started, I'd also like to remind listeners that during today's recordings, we may discuss forward-looking statements and actual results may vary from today's statements, and nothing the panelists say should be construed as legal or financial advice. With that said, let's get started with some background and context. Hedera is a layer one blockchain that supports a number of enterprise use cases, from developing tokenized assets for Fortune 500 firms to building consumer apps that abstract away from the complexities of crypto. Greg, to kick things off, a few days ago, the Hedera Foundation announced a strategic partnership with Onera to bring Hedera-powered applications directly to institutional clients through Onera's Fin P2P super apps platform. That's a mouthful. Essentially, on that note, I want to talk to you about this. Like, what does this partnership really mean? We pulled up the press release here for the audience to kind of get a feel for this. But why is it such an important step for institutional adoption right now?
So it really leans into one of the big themes or trends that I think we're all going to be watching in 2026. And it's the tokenization of US equities to real estate and the connectivity. Today, the global financial markets are really just beginning to really actively engage with our industry. They're moving value on chain onto Web3 rails. And that regulatory uncertainty that existed for so long is no longer the obstacle that it once was. And so this is really the opportunity that we see for Hedera to position and be recognized for its unique position for regulated financial markets. That's the scalability. It's the a network operated by Fortune 500 companies. It's all the table stakes that is required around the sanctions compliance and regulatory compliance. Mm-hmm. And this latest partnership with Onera specifically, it's about meeting the financial market where it is. It's integrating with traditional infrastructure or plumbing. And with Onera and Hedera, we have this interoperability, not just between Web3, but more importantly, the connectivity to FIX, to ISO 20022, which is Swift's protocol. Mm-hmm. You have connectivity to institutional mainframes, to proprietary ledgers or private ledgers, like that of the DTC. And so it's increasing the supply of assets that can be tokenized, and it's about growing the buy-side demand as well, where you can access and buy tokenized securities while removing the complexity of wallet infrastructure. Onera has worked very closely with the DTC to tokenize and move equities on chain, collaboration for the great collateral mobility experiment. And I think it's only going to be accelerated now that they've received this no action letter from the SEC. And that was just last week. So I think equities are going to be coming on chain. We're going to see more of that happening. And it's going to be utilizing standards like the ERC 3643 as well as others. Hedera is a member of the 3643 Association. So I expect it to really start to amplify in terms of the volume. Now, the DTC has already announced one chain, and I fully expect there to be several more that will be coming over the coming year. But ultimately, it's not just about finance. It's about a trusted internet layer, and that's really, I think, what society needs as we are interacting and moving value in a digital realm on the internet. And if in that world, trust and authenticity is becoming more and more scarce. And mm-hmm. So Hedera is this infrastructure that's verifiable for commerce. And we're really excited about this partnership.
Yeah. For Stephen and Ed, how do you kind of think about this from the institutional side? And Stephen, for you, how does this play into the institutional conversations you're having around the Canary HBAR ETF? And then Edward, any early thoughts on this for the front of like scaling tokenized real estate projects like yours at Red Swan?
Yeah, well, first of all, I think in the short run, this isn't going to be a huge difference maker on the institutional side. Most institutional investors are going to invest via private funds, ETFs, mutual funds. So the ETF itself will be the vehicle that institutional investors come in through. And at Canary, our focus really is on institutional investors. And just to break that down really quick, because a lot of people in the crypto Twitter sphere don't understand what that actually means.
Yeah, explain it for
They
us.
think financial advisors are institutional, and they're actually not. That's so institutional. What that means is insurance companies, pension funds, and sovereign wealth funds. Those are the biggest pockets of money globally, and that's what the institutional investors are. The next layer down is probably going to be pensions. They're a bit of a hybrid because they are holding money for individuals, but they're also institutional players, and when they're large enough. And then endowments is a bit of a hybrid too. And then you get into family offices and financial advisors that are really investing on behalf of other people. They're considered intermediaries for the retail investor and then the retail investor themselves. So we're focused on the institutional investors for the most part, but also retail. We're also really focused on the retail customer that wants to purchase via an ETF that might have multiple accounts. So I actually think in the short run, even though it might not be an institutional platform for having tokenized securities, tokenized ETFs, tokenized equities, it's really going to play into the hands of people that, I mean, there's a lot of people that only have accounts set up at a Coinbase or a Gemini or an Archex or any of these other crypto native platforms. And it gives them access to platforms that they don't normally have. I mean, these are token investors. They're not ETF investors. So when you tokenize that, it moves it over to this other segment. Now, in the long run, I do envision a world where institutional investors are moving into the tokenized platforms and buying tokenized, securities or what have you. There's a lot of people out there that believe 10 years from now that everything that people purchase, whether they're institutional or retail investors, is all going to be tokenized. I don't doubt that. I think that there's a world where we can see that happening. But again, in the short run, I don't think it really changes much on the institutional side, but it certainly changes a lot for retail investors that don't have brokerage accounts that are really on tokenized platforms and crypto native platforms.
I agree with Stephen, and I also agree with Greg says, and really pleased to hear about the partnership with Hedera. We are actually onboarding into Hedera as well because we look at this as a distribution channel, right? A one-stop shop for major institutions who are looking to have digital exposure to real estate. And, for them to have to jump all around to different websites to try to find what they're looking for, I think is time consuming. I know when I was at Cushman Wakefield and we're selling major pieces of real estate, it's all about calling the right buyer, connecting the dots, and done deal. And I think that's exactly the same thing we're producing right now with this Hedera relationship, is that we can load up our product, and these institutions are looking for access to spread across the board, whether it be stocks or loans or mortgages or private credit or real estate. They can just pick their quantity. They can buy right away, get diversification. So I think that makes a lot of sense. I also like the fact that we're sitting here with Steve and Canary, because ETFs does the same thing, right? ETFs is giving the individual and the institutional investor diversified access to different products that they normally would have to try to pick and choose their own. And let's face it, on the institutional level and even on the retail level, they're getting lazier with their due diligence and time they have to put towards making decisions. So making a more diversified decision is more defendable than it is trying to pick that absolute winner. And so when I look at these, for example, the ETFs that Stephen's putting together, I'm assuming one of these days we're going to start wrapping in other digital asset classes so people can get access to everything they want within one push of a button, pretty much.
Yeah.
By the way, I was going to say one more thing just to address, some of the things that Ed said.
Yeah.
I was an institutional investor years ago in TradFi, and I was the guy on the other side of Cushman and Wakefield getting calls like, "Hey, does the insurance company you represent want to buy, debt on this office building for, it's like a, $20 billion issuance for this group of offices. And we were, making those investment decisions. And it was a very time and, trading bonds. I was a bond trader and private placement trader. And it was a very time consuming process. And I'm old enough to remember when market access came out. It was about 15 years ago, where you could actually start trading bonds via a platform and not via Bloomberg and phone calls. And that was a big difference maker when you're trying to trade smaller issuances and odd lots.
Mm-hmm.
Tokenization fits that same role that market access did over 15 years ago, where real assets like real estate or other type or container ships, locomotives, airplanes, there's bonds that represent all of these real assets. And if you can trade that on a tokenized platform and trade fractions of those shares and make it more liquid, I mean, it's a bond trader's dream that anybody that trades esoteric assets. So I fully in favor of and believe that, I mean, in the very short run, real assets in a tokenized, value will immediately get traction.
Mm-hmm. Yeah.
And at the end of the day, it's going to be quality of asset and yield, right? And I think when you start to build different products, whether it be an ETF or with Hedera, you're going to have higher performing assets and better quality assets. And I think at the end of the day, that's what you're going to see, the leaderboard buying.
Mm-hmm. Yeah. The reason I laughed before is because it's so normalized to, just like pick up your phone or your laptop to go trade an asset. But it was 100% real. I've seen the movies. I wasn't, working in the workforce at that time. But when you pick up the phone and you like trade, right? And now that's like not even heard of at all. And then I feel like in a similar vein, like in 5-10 years time, people will look back on the early days of tokenization and kind of joke about like where we were versus like where we will be. So it's going to be super interesting to kind of see the evolution on that front. Is there any specific area, and I think all three of you touched on this, but I want to ask more directly, on the front of tokenization, you talked about real value and real assets. Is there a specific area that institutions really want to tap into first when it comes to tokenizing?
You probably get 3 different opinions.
I know. I want to see. You guys are all having different conversations.
I'll give you mine, and I actually share some of the background with Stephen and Ed here, and that I was a banker my early part of my career, creating structured products. We were taking a whole bunch of assets and combining them and creating a bond or a debt instrument. And so there are clearly parallels between the structured securitization process and tokenization. I think that there's 2 schools of thought, I believe, and it sort of really depends on the end buyer. But there's real value in the improvements and efficiencies that come from tokenization, the reduction in the costs of multiple settlement infrastructures, multiple ledgers, and reconciling across. And that leads itself really well to equities or very liquid assets. And so that's why you see, you look at the largest tokenized asset, well, it's the US dollar right now.
Yeah.
Right. And then it goes into money market funds. And then it goes further down the yield curve. So I think that there's similar type of process, but a lot of the innovation and benefit of tokenization comes in the ability to do new things that tokenization enables. And that's where it fits really well with things like real estate or other debt instruments.
Mm-hmm. Yeah, I agree with that. Ed also brought up the ETF. We got Stephen here from Canary, and I want to talk about the Canary H-Bar ETF, which has been trading for about 7 weeks now with strong early momentum, building around, I think we're seeing 52 million in assets and even going live on a number of traditional brokerage platforms. To start off, maybe a lay of the land across ETFs. Stephen, you're the expert here. How would you kind of categorize the interest for this from an institutional perspective?
Sure. Well, and just to clarify, I'm not an expert. I just accidentally fell into ETFs one time.
Okay.
And I couldn't get out of it.
All right. So the not expert. Take it away. Yeah.
But, it's just like, it's the only thing I'm useful at anymore.
Oh,
but,
yeah.
so the interesting thing, I mean, one of the reasons we love Hedera is its community. It's first of all, and Greg can talk more to this because he's actually the expert on this matter. But what we like about it is it really is probably the leading technology platform for enterprise solutions in the world of crypto. It's not technically blockchain. It's hashgraph technology, but which leads it, which gives it the ability to do things like enterprise scalability as well as even AI. I think AI doesn't work on traditional blockchain because traditional blockchain would be too slow, and a lot of people are like, I built an AI protocol, and come buy my token. But no blockchain is fast enough to process that. Hashgraph actually does have the potential of doing that. But from a pure enterprise standpoint, we believe that Hedera was the leader in enterprise solutions in the world of crypto, and we tried to look at the category killers for each area. I mean, obviously, Bitcoin for money, Litecoin for money with a privacy aspect to it, XRP for traditional finance rails, and then of course Hedera for enterprise. And what's also interesting about that particular network is the community that's behind it. It is a lot of people that work for enterprise solution companies, and some of it's not your typical blockchain crowd. It's like people that work at like Intel and Oracle. I live in Nashville, and there's a big Oracle headquarters here, and all the Oracle people know what Hedera is. So we saw a massive opportunity in putting the HBAR token into an ETF, and sure enough, it's played out better than some tokens that have a larger market cap. So we've been very pleased with it. We do believe that from a tokenization standpoint, it's going to be really important, because what tokenization of an ETF allows is 24/7 trading. So an ETF itself is only trading within market hours in the US on the exchange that the trade is on. But this allows more 24/7 trading, which is pretty attractive to people around the world. And even looking at some of the conversations we've had with institutions, I mean, we're talking about non-US insurance and banks that are interested, which we find again very interesting.
Yeah.
That's
who's looking at this.
Mm-hmm.
Yeah, there's an old adage, right? When you're talking about institutional adoption of technology, and it's that no one ever got fired for hiring IBM.
There we go. Yeah.
And Hedera is sort of this protocol that executives, when they're looking at their Web3 strategy and saying, all right, how do I plan for this, that they turn to for enterprise grade infrastructure, network run by IBM, a network run by Google, a network run by Dell and other Fortune 500 companies. So it does have that within its DNA.
Mm-hmm.
I can echo that as well from a more lower level. As we talk to customers who are looking to tokenize their assets, and these are customers that are financing 50 million and above worth of assets, they never hesitate when I recommend Hedera, because of all the blockchains, that's one they do know about. I think Hedera was smart to have the technology side as well as the blockchain side, because it seems like when they built the technology, they did it with enterprise institutions. And then as they manage the technology, they're managing it with enterprise institutions. That makes a big difference. Like you said, you don't go wrong when you have IBM or Microsoft on your board governance council. And I think when we mention that, right away, people feel very comfortable with the sustainability of the blockchain itself, versus if we said we were bringing on a blockchain that may be running it out of their garage, they never heard of, they probably be objecting to it. But when we mention Hedera, most people know that company. And I mean, globally, they know Hedera. So they've done a great job with that.
Yeah. But the ETF, though, how does that kind of help institutional investors, see Hedera's real world strengths in these areas that you're talking about on the enterprise front, tokenization, et cetera? Do you see it as like an aid, or validity. I don't know what.
Yeah, I
what
think
would be
it's,
the
I
word?
think it's a bridge, it's a critical bridge, and sort of connecting the various markets, removing the complexity of having to have the digital asset custody fully solved, if you want exposure. Definitely trading on the Nasdaq legitimizes Hedera as this institutional grade infrastructure. But I also think it's beyond the price exposure. I think the ETF certainly offers that exposure to HBAR, but it also highlights, to Stephen's point, some of the real world applications, the verifiable AI, the supply chain tracking, the tokenization. And these are being done by enormous corporations. Microsoft isn't yet on the council, but it is a rotating council, and so we would love to have them come on board. But for tokenization, we've already seen some really interesting innovations. So Archex recently actually tokenized the Canary Capital HBAR ETF itself, done so on the Hedera network, and so that creates an interesting flywheel. And I think when you can tokenize equity, you can tokenize equities and ETFs and indexes, and you can create all interesting types of exposures. And we're seeing them also do that in terms of their basket products. Mm-hmm. So taking a basket product that looks like a mutual fund or that looks like an ETF and gaining exposure to underlying assets. And so today, that could be money market funds, it could be equities, it could be real estate, it could be crypto, all combined and personalized. And so that to me is really exciting. As exciting as seeing Hedera and HBAR listed. I think it's now 13 ETF filings that have been out there. So that's, there's a lot of positive momentum.
Yeah.
Can I also share some inside baseball on this?
Yeah.
That I think people would be interested in. So when Canary only began about a little over a year ago, I mean, we obviously had our team has been involved in ETFs for a long time, but we filed for 4 ETFs under the Gensler administration, all altcoins, and 2 of them they asked us to withdraw, and both of those have ETFs that are live today, by the way.
Do we get to know which, or is that problematic?
Yeah, I'm just gonna, you can guess. And then the other 2, one of the other reasons why we filed for an HBAR ETF was we believed that it was clearly a commodity in the way that it was positioned, and then Gensler had also mentioned that Litecoin in a speech he said Bitcoin, ETH, and Litecoin are not securities. We're like, okay, well, nobody's filed for Litecoin yet. And then HBAR is clearly not a security in our opinion because it was registered as a commodity. So anyway, the other 2 we were asked to withdraw our filings, and then the 2 that proceeded under Gensler, by the way, were Litecoin and HBAR, and we got comments back from the SEC under Gensler's SEC before the new administration took over. So what I really wanted to point out here is that there's multiple reasons why we pursued this, but one of them also was that it was not a security very clearly and registered as commodity.
Yeah, and even under that administration, I mean, that's a pat on the back for Hedera.
Yeah.
Well done, Stephen.
Anyway, the role of Spain.
I didn't know this.
Must have been a good application. Yeah. I also want to talk a bit about some recent news from October. Red Swan tokenized the hotel on Rivington. I think we have a picture that Greg posted. It was the first New York City skyline building on Hedera. Can you tell us a little bit more about this and why you decided to tokenize commercial real estate?
That photo, by the way, is in the hotel.
I love it. I love it.
Yeah, that was a beautiful day because we were able to showcase, a large portfolio of hotels, Rivington being one of them. And I think it was really nice experience for investors to be sitting in the penthouse of that hotel, as you see out of the window, and imagining themselves being shareholders of this hotel. So they're no longer takes that what if, this, what am I actually buying? It puts it squarely that, look, you're now buying ownership of a real, live, active, and functioning hotel. So That's what we focus on 100%. That demand is increasing on an enormous scale. We're seeing some of the largest companies that own real estate in the world, especially here in the United States, talking about planning for tokenizing their assets. They want to meet up what they anticipate being the demand. And on the other side, when you talk about the demand, as Greg said, with more stable coins, the US dollar minting being allocated around the world and being tokenized is creating more capital out there seeking yield. And I think that when you look at that, people start to figure out, where can I spend my money? And the most efficient way to spend their digital capital is buying digital investment assets. And then you also look at recent movements from companies like Merrill Lynch, Bank of America. They've now allocated an extension of their digital exposure from 0 to 4%. That's huge for Merrill Lynch, because before it was 0. They wouldn't allocate anything towards digital assets amongst their 14,000 advisors. So we see this as an opening for increased demand. And so, yeah, we're just continuing to tokenize more product, and we're seeing more interested from the investment side, whether it be institutional, foreign investors, local investors, family office investors. They're all starting to realize how digital is much more efficient in terms of options than non-digital.
Mm-hmm. What opportunities does tokenizing properties like this kind of open up? Is it like broader access to just a new marketplace, liquidity, diversification, a bunch of different terms, but like, how do you think about it? Or how do you kind of talk about it to potential investors?
Well, great question. I've sold real estate for 20 years institutionally, and it was always the ultra rich game, right? Only those who can afford to write those checks from $500,000 to 20 million were even called, and the upper scale is one get the most frequent calls, right?
Yeah.
But so many people were locked out of these transactions. I think now that we're tokenizing the assets, we're opening it up so anyone around the world can have access. International can come through the Cayman sleeve. US we're accredited, can come directly to buy assets, pick assets of their choice, or pick a blended asset portfolio if they're not sure. But definitely the exposure to real estate on a digital level is growing. I think that makes a difference. But on the property owner side, it's a huge benefit for them. Right now the market is kind of locked. I mean, there's transactional volume is down because interest rates are so high. They can't get their equity out of their properties because they can't sell the property at the desired price. But if they can now tokenize some of the equity to generate some liquidity, they can use that liquidity to either pay off investors, pay off the gap between refinancing their mortgage, or put that as a down payment for buying a new property in today's market. So you need that liquidity to keep the flywheel turning. And I think that people realize tokenization is a great source for providing that.
Mm-hmm. Yeah, I mean, Red Swan has tokenized over 100 million in assets on Hedera. That is a pretty large chunk of change. But obviously there are probably challenges along the way, I would imagine, right? Can you kind of like walk us through what were some of the pain points early on, and then like maybe bringing this on Hedera, and you guys have already talked positively about it, but like why Hedera opposed to some other chains, right?
Well, challenges, I think, is just educational. People just don't know. The previous administration was very negative about everything digital. And so everybody put that in the same bucket that, hey, you're selling Bitcoin or you're selling cryptocurrency. They didn't understand you're actually selling securities that are asset backed. But I think the new administration has made that very clear, and they've made legislation supportive of engagement for digital assets. And that's been a 180-degree turn. I think Hedera has just made it very easy for us because their focus is very similar to ours. They are really focused on RWA and also very focused on finance. So when you put those two together, real estate falls really squarely in that bucket as our huge, largest asset class in the world for RWA, but also the financing of that asset class through tokenization and products we're putting together makes it much easier for everyone to have access, and it make it flow much easier. Think about how many people stay away from real estate because they can't put all their assets in their eggs in one basket, or they don't know when they're going to get their money out of the real estate. So they'd rather just put it into something that's more liquid. But if they had an option now to be able to put their shares of real estate up for sale and allows them to buy it, and it happens, they're going to be more opted to buy real estate just as freely as they're buying stocks and bonds.
And from our perspective, Red Swan is a broker dealer, FINRA regulated entity in the U.S. that's saying, hey, we want to go down this tokenization path. We were really excited to partner with them and have a product, an open source product developed in tandem. And so Red Swan was key to the development of the Hedera Asset Tokenization Studio, which is available for expediting the path for a issuer coming to market with a tokenized security for Reg D, Reg S, and other growing lists of sort of jurisdictions in which it supports, and adding new standardizations, because it started with the ERC 1400, and then it has now recently expanded to include 3643. So there will be these tokenization standards that have the embedded compliance aspects of what the securities industry needs. And so when you have that within the token wrapper, and then you similarly have a network like Hedera that has the embedded sanctions compliance, the embedded KYC on the asset level, the throughput, the fixed low cost, you have a compelling elixir for being able to onboard large financial markets.
And Stephen, for you on your end with the HBAR ETF from Canary, how do you kind of see that serving as a bridge for TradFi to participate in this RWA/tokenization trend, especially with projects like Red Swan coming online on Hedera?
Yeah, look, I kind of going back to real world assets, I think that's going to be the immediate response from institutional investors is accessing those real world access, so those real world assets through tokenization. Look, real estate is one that people have been trying for a long time, and I think it's, it was probably one of the earliest ones that people were working on, and it's gotten there as far as a market goes. But the ones that I'm really interested in are the ones that are very esoteric. That's mainly just because of my background. Some of the more structured securities or other types of asset-backed securities that are non-real estate related. That's where the opportunity is, in my opinion. It's one of the reasons why I got into blockchain in 2016 was I was like, there's got to be a better way to do this. And the blockchain technology at the time, I believed had that ability. And I've actually been working on tokenization since 2016, 2017. And many years where there's been no market. And I even remember working with Archex back in 2018 on tokenizing various types of assets back then. But the problem was we had a lot of people excited about it and knew the potential, but you didn't have the people on the other side of it that were buyers. And we're starting to see that happening now. We're starting to see a two-sided market now that people actually understand what it is. But all of us nerds 10 years ago understood it, and the nerds understanding it isn't enough to make a market.
That's true. When it comes to kind of Edward, your perspective on the inverse, I asked Stephen this. I want to ask you on the other side. We had the HBAR ETF launch in October, as I mentioned earlier. Have you seen increased interest from the institutional real estate players in tokenized offerings on Hedera since past 2 months or so? And Greg, you as well?
Well, I've seen increased knowledge of Hedera and the name Hedera based on that, because customers say, yeah, they just launched an ETF, so they understand. They don't say that about other blockchains. Other cryptos. And other blockchains as well. And so when they mention that, and I'm saying I'm going to tokenize, which blockchain would you like to use to tokenize? And they mention Hedera, say, oh, absolutely. They know that name again, and that reinforces their confidence level in addition to their governance board.
Yeah,
it's been, from our perspective, is an incredible awareness tool and validation. As I mentioned before, I think the regulatory clarity has been really well timed in tandem with this, so that they go hand in hand. But some prime examples include some of the other ecosystem partners within the Hedera realm that, for example, Zonix, that has worked with a European platform called StegX to tokenize some real estate in Europe. StegX was also the driving force behind the recent partnership with the national with the nation of Georgia on their land registry. And so this is where it's not, the building blocks for real estate. Yes, you can tokenize the receipt of ownership of the security. Yeah. But you can tokenize and create a more digitally native and a higher integrity asset when you start with the building blocks, the land title, and how you validate and authenticate the title in various regions. And now you can use that as collateral for a mortgage, use that as a means to provide purchasing power for individuals and an investable product. So there's lots of trust problems that are solved when you approach the Hedera network not just as the sort of the settlement rails, but as the trust and authenticity of rails for the infrastructure. And that's what we're really excited about. And so, I would say that coupled with the sort of the awareness of the ETF, we've seen a real uptick in the number of nation states that really have been engaging with us. And that's coupled with some of the central banks, like the Reserve Bank of Australia, the Bank of England, the state of Wyoming, to name just a few that have been recently publicized.
Okay. Do you see more of those coming online next year?
I'm excited for them.
Yeah. Okay. Thinking about 2026. Sorry, what were you saying?
A lot's coming online next year. I mean, just
I know.
momentum we're seeing this year. I
It's
think
crazy.
the floodgates are opening up next year for sure.
Yeah. I was going to ask you guys on the front of 2026, obviously we're wrapping up the year. How do you kind of think about the biggest opportunities that you see on the roadmaps ahead? Because obviously you could think about there's a lot of areas and a lot of distractions, a lot of narratives or trends or whatever you want to categorize it as you could latch on to. But what do you kind of see as the biggest opportunity for 2026 that you want to tap into?
Look, I wish I could talk about something else right now other than tokenization, but I truly do believe that that is the opportunity in 2026. So, by the way, I'm going to, upset a lot of people as I have on Twitter and saying that we are still in a 4-year cycle and the market peak was in October. So too bad if you think otherwise. But bear markets are the perfect opportunity for true builders. And it doesn't matter what the price of any digital asset is in 2026. Tokenization is coming online. A lot of people are working on it. There's going to be a handful of chains that win. Hedera is one of them. And people that are building are going to make money regardless of what the price of tokens are. So it's going to be the year of building, and this is the biggest.
I think on top of that, this is the year for building, but I think it's going to be the year for investing. When you have bear markets, that's the best time to step in and make investments. You're buying at the best price point. Capital is waiting for the knife to drop and hit the floor. It really going to get to that point, but when it starts bouncing back up, that's when you see the people rushing in. And I think for us, building the infrastructure to handle the volume of business that we know is coming is what's important, because what you don't want is to blow a gasket midway because you're not prepared for the activity that's there. And I mean the full process of tokenization, delivery on the primary, management, and also execution on the secondary. You want to make sure that's flawless and foolproof in terms of heavy volume. And I think that's what the institutions are going to be expecting. That's what the public's going to be expecting. And that's what we want to deliver.
The financial sector just got the okay to upgrade its technology stack, its custody, its settlement infrastructure. And, that's happening, and that will continue to happen throughout the year. The cost savings and benefits of tokenization will be realized. I expect further standardization. I think the programmatic use of stablecoins will be really exciting to see, because that will impact dividends, it will impact interest payments, cash flows from products, and invoice payments. So utilizing these stablecoins as the lifeblood of tokenized securities is going to be something that's going to be very, very real. And then I guess what I'm also really excited about, and I think this is probably more than just the next year, but it's agentic payments and AI. And that's where trusted, auditable, and credentialed AIs. And those components are really important because an AI agent is going to be able to do a whole bunch of things, but if it's not trusted, if it's not auditable, it's not credentialed, then it's not going to be let into the party, so to speak. And so those aspects, and as they move into high frequency, verifiable transactions, agent-to-agent stablecoin payments, that's going to come, and that's going to be the source, I think, of the next trillion transactions.
Mm-hmm. Is there something specific on the front of the agentic payments that's standing out the most to you on that, though? Because I feel like there's a lot of conversation, or there was a lot of conversation earlier this year surrounding that.
Yes, well, I think it's the credentialed way in which agents will and/or verifiable compute will occur. And so what we've been seeing on Hedera is that firms like Equity Lab are partnering with NVIDIA and Intel and enabling the means by which you can trust what an agent is ultimately acting upon. You can audit it, and so this will be, I think, one of the largest uses of blockchains as a whole, and Hedera specifically, because of its positioning and being able to validate and verify the way that an agent or an LLM responds or acts or transacts on your behalf. And that is what we need. Like the internet, a trusted internet. That's what society really needs. They need to say that they can believe what is read or seen or said or invested in, and that authenticity is becoming so scarce.
Yeah.
Remove the tech for a second. Just think about dividend payments for real estate. Typically, it's annual because it's how long it takes developers to figure out how much they can distribute. We push for quarterly payments because we think that's necessary for tokenized assets. But I think agentic is going to come in and actually make daily airdrops of interest based on programmable contracts. So I think that makes it a lot easier because you don't have somebody just sitting down trying to calculate the distribution amount per capita per wallet. It can be done automatically. It can be done daily. And I think if you're sitting there with 5 or 6 different holdings, and every day you're getting drops of interest in it, just like you're doing when you see DeFi, that's exciting. And people haven't seen that before. But when they start seeing that, they're going to want more of it, I guarantee you.
Mm-hmm. How do you guys kind of think about onboarding in 2026 versus 2025? The conversations that you're going to have with enterprise businesses, institutional players, any category outside of like the extreme crypto natives, I'd probably say. Is it going to be similar? Or is it going to be different? Like, has the needle kind of moved in a sense where you no longer have to heavily educate or go over the regulatory factors, because we've kind of made a step forward in 2025 on that front?
I know on our side it's going to be much easier. It is much easier now. Before, we had to sit down and explain everything about tokenization, the differences. Now we have more people leaning in. They've done their education. Yeah. They're kind of ready to engage. They're asking more next step questions as opposed to how about this and how about that. So they're more determined to get tokenized than they were before in the past. So for us, that onboarding process should be much easier than it has been.
I think it's an interesting question as to who are we onboarding? Are we onboarding Jackie or Greg or Ed?
I'm onboarded.
Are we onboarding agent that is going to transact on our behalf? And then what is the credentials that agent has in order to facilitate those transactions? Because this is where we're moving from. This world where we engage with an LLM in a talk to me fashion, right? Whether it's on Twitter or otherwise, or X, right? Or an LLM to do this for me. And that's not going to be that far into the future that we're going to have that type of engagement. So the UI of onboarding is going to radically change.
Mm-hmm.
Yeah, I mean, I think about what the UI looks like, and onboarding is not going to have, it's not going to be a complicated conversation, because right now tokenization has become a household word for a lot of institutional investors out there. They've been digging into it. They understand it. What's going to matter now is, what is the UI? And can I just go to a website and very simply buy and sell things? I don't care what the technology is in the background. The technology matters because, whether it's trusted or not, and how fast it is and how secure it is. But what really matters is the ease of use. And we're there now.
I couldn't agree more. It's going to be abstracted. It's going to be less about, is this real estate tokenized on Hedera? And it's going to be more about, what are the attributes of this real estate property, the yield, the return, the risk characteristics, like going back to what investors actually care about.
Correct.
And well, it's innate, it's available to me 24/7, and I can get access to it really quickly, and I can purchase it.
Mm-hmm. Yeah. Okay. Last question, maybe mostly geared at Greg, but Stephen and Ed, please chime in. What other innovations on the Hedera's front in 2026 are you most excited about, or that users, developers, etc., listeners can anticipate? So it's probably more Greg, but then for you guys, you could say, what are you most excited about? And it might be the T word, the tokenization.
Well, obviously that's a big one. I mean, we stand at this precipice of just adoption, institutional adoption, and it's maybe a little bit odd because the crypto market has been selling off, yet the engagement from the industry has never been more active, and so that is where the tokenization space is just going to massively expand. And I'm excited about the ways that tokenization can be used to create new innovative products, to find greater cost efficiencies, to improve cash flows, to improve the user experience. Like, now is when Hedera is going to prove the step function better experience that everybody wants, right? That why we're tokenizing. And that's really exciting. And it's innovators like Ed at Red Swan and Stephen and people throughout the Hedera ecosystem that are really driving this. And the Hedera Foundation is here to help. And so it's really fun.
I look forward to next year planning future tech for example, our ATS. I mean, I'm working with groups like Hedera to build agentic type of technology in our ATS, so it's more inclusive. So it brings in that Onera kind of system as well. You've got to modernize all your technology, and I think that's one of the last pieces of technology that needs to be automated, because at the end of the day, that's where the massive amount of activity is going to take place. And I think we have to give it some really serious thought and also interject the best of technology. And I think AI and agentic technology is going to be a big part of that.
All right, Stephen, take us home.
Yeah, look, I mean, I got into this space 10 years ago because of the promise of potential tokenization, and now it's here finally. And I'm actually looking forward to participating in that part of the ecosystem more. And and look, there's multiple platforms that works in. There's some better than others, and I believe Hedera is one of the top ones to work on, and that's something that we're potentially looking forward to doing next year in addition to our ETFs.
Well, thank you, Greg, Stephen, and Ed, for taking the time to talk today, and to everyone for listening in. Looking forward to chatting more about what Hedera has been up to next quarter. Thanks, guys.
Thank you.